Welcome, Sethu, Retiring to the Stock Market, Session 12. How are you?
Yeah, I'm doing fine, Eric. Good morning to you. How are you doing?
Congrats. Good. I'm doing good. Got my coffee. Congratulations. You made it to
Yeah.
Session 12.
Yeah.
We talked about Mr. Morgan, how you're going to manage money for him and make money. We talked about stock selection, yes?
Yeah.
We talked about cover calls. By the way, what percent can we make on cover calls? What's a comfortable amount of money you can make? Not so hard amount of money that you can do it and also teach it.
Cover calls.
We just did it. We just reviewed it. What's the amount?
Yeah,
per
4
month?
to 5%. We can get.
And it's didn't we review Tesla and Skechers?
Yeah.
What amount did we arrive on the cover calls?
I think we got around 3.53.
Just on Tesla and Skechers, what percent did we get?
3.53.
Okay, that was if you mix the dividends and the share growth, right?
Yeah.
But we're not doing Tesla dividends or Tesla share growth. We're doing Tesla cover calls. The cover call only and the Skechers cover call only gave us what percentage on per month on the cover call alone? Do you remember? It's higher than 3.53. Much higher.
Okay. I think Tesla gave us 6.5 and Skechers gave 4.9.
Correct. And if you average those two, 6.5 and 4.9, what's the average on those two?
11.4 divided by 2 is 5.7.
5.7, right. So what percent can you get on cover calls?
5.7.
Correct. Very good. So we're looking at the formula we need to retire you into the stock market. What's the figure you want to make per month?
Around 4,000 US dollars.
Right. And if we do 50% of your account to cover calls, we know we can do 5.7% on that.
Yeah.
And 5.7, I get 5.721. Is that what you get?
Yeah.
And if we do 25% dividends, we looked at White Horse Financial, and also IEP, right?
IEP, yeah.
And we also looked at NLY.
Yeah,
right?
NLY.
What was the average? What's a good high average return for those stocks on dividend per year? We did the number already. Remember?
Yeah, we did for the IEP and WHS. So it came to around 1.04.
12 per year. What's the yield per year?
Okay, 15, 10, and 13.31. Just give me one minute.
We add them together, then we divide it by 3, so we get the average.
Yeah. So 1.
We're doing first. Let's do per year, right? Because yield is per year, right? Then we divide that by 12, right?
Yeah. So I got 3.2.
Wait, back up. Okay. What's the yield per year average on those companies? NLY, IEP, NLY, and also WHF.
Okay, IEP was 15%, WHS was 10%, and NLY was 13.31. So all summed up then comes to 38.31 divided by 12 is 3.1.
No, you don't divide by 12. You divide by 3.
Divided by 3. Okay.
because there's 3 stocks.
Okay, sure.
And what's the yield per year?
12, 36, 3.
38.31 and divide that by 3 to get the average.
Yeah, to 12 point something.
Can we just say 12.5?
Yeah, 12.5. Yes.
Now that's yield per year, right? So now we divide that because we're looking to get money per month. So we divide that by 12. What do we get?
12.5 divided by 12 is 1.04.
1.04%, okay, on dividends, okay?
Yeah.
1.04% for dividends. And that's 25% of the account, okay?
Yeah.
Now, let's say we put 25% of the account on share growth. Now, we know that we can look at like 5-year charts and get some stocks that have great share growth, right?
Yeah.
The theory is that the share growth will repeat. It's not going to be exactly the return you're going to get. But if you're going to get stocks like Skechers, which you know went up in 5 years,
Okay.
Apple, which we know went up in 5 years, you know, give me another stock that you know went up in 5 years.
5 year. I don't know whether
Look at your
Zoom or Moderna will fit in there. I don't know.
Let's find out. Let's look at Zoom. We want to give our customers the right information. Let's look at Zoom 5 years ago.
Okay.
I'm gonna check right now. You check yours. I'll check mine. Okay.
Yeah, I'm checking now. Yeah, but Zoom was there only last.
Oh, Zoom is not good because it starts in 2019.
Yeah, that's 2019.
So let's get a stock that has a definite 5-year chart, a 5-year chart.
You look at Facebook or Meta.
Do you have Facebook in your core 10?
No, I don't have.
Give me a stock in your core 10. Let's be honest.
Okay,
because
okay.
you know, hey, give me a stock in your core 10. What is it?
Okay, so we have for growth stock is Apple, Nike, and Starbucks.
Do you want to look at Starbucks?
Okay.
Okay, so I have $86 today. 5 years ago, I have $55. Let's get a better one. Let's improve that. Okay. You said Nike, right? Nike, I have 114 today. I have 59.76 5 years ago. 59.76. I have 114.18. Almost double.
Okay.
Let me do AMD. Do you have AMD in your core 10?
No, I don't have.
Do you have NVIDIA?
Sorry?
NVIDIA, NVDA?
No.
Give me some stocks in your core 10. Let's be honest with our investments.
Okay. So the other stocks I had was dividend stock. I had Philip Morrison, GSK, IEP, KO, and Amgen.
Coca-Cola. That's interesting. Coca-Cola.
Core one I had only 3: Apple, Nike, and Starbucks.
Let's look at
And
Nike.
on the cover call I had Skechers, Twitter, Zoom, Netflix, Nvidia.
Do you have Apple in your core 10?
Yes, Apple. Yes.
Let's look at Apple. Okay. I like Nike. It went from $59 to $114, so almost double, right?
Yeah.
Apple, I have 166 today.
Yeah.
And then 5 years ago, I have $39, $39.10. So if we divide 166 divided by 39, we can be about the cents. You can do the cents if you want, but 166 divided by 39 equals 4.256. 400% return, 425% return. That's called a 4-bagger. So if you're going to give yourself a goal to get a return on your share growth stocks, what's a good percentage per year? Which is a doable percentage on your share growth stocks. What did we practice? What percentage were you comfortable with per year?
Year on year, 10%. I don't know.
We put in 20%. You remember?
Yeah.
If you get stocks like Apple, which is a 4-bagger in 5 years, Nike, which doubled in 5 years, and they're not going to all perform that well. Okay, I'll tell you that right now. You might have some even go down, but we're looking to get an average. We're looking at our core 10, and we're looking to get an average on the share growth stocks. Okay, we know that these stocks went up. Coca-Cola, Skechers, right? A good goal to shoot for is about 20% per year. Okay, and let's divide 20% divided by 12 because we're going to look at monthly return, right?
Yeah.
What do we get?
20 divided by 12 is 1.66.
1.66% return per month. Is that fair?
Yeah.
Now, we're getting 1.04 in dividends. We're getting 1.66 return in our share growth. We know dividends are 25% and share growth is 25%. So we're going to get the average for those, okay? We get the average of 1.04 and 1.66. What's the average of those two?
2.70
divided by 2.
1.35 average.
1.35?
Yeah.
I get 1.353. Can we put the 3 in there?
Yeah, okay.
You don't want to lose money like you. You want to use all the numbers you can. Okay, 1.353. Okay. So we got half of our account to cover calls. We know we can get 5.721 on the cover calls. Let's say if we average Skechers and Tesla and other stocks. And we know we're getting an average, that's 50% of the account. The other 50%, we can get an average of 1.353 a month. So let's average those two, 5.721 plus 1.353. What's the average of those two? Because you're going to put half of your account on cover calls and the other half on share growth and dividends, right? And also we're going to throw in there trading, right? Trading, like we said, is difficult. But if you're a trader, you can buy Starbucks at 86 and sell at 88. You can buy it 87 and sell at 90, right? You buy at the support, you sell at the resistance, right? We talk about that. So we're gonna just throw that in there. I'm not gonna give you a return for the trading because your results are gonna be mixed. It's not gonna be exactly, okay? But if we average 5.721 plus 1.353, we're getting the CCs at 5.71% and the dividends and share growth at 1.53%. We average those two. What's our average?
7, 10, 7 divided by 2 is 3.53. 3.53.
Yeah, 7.074 divided by 2 is 3.537. Okay, so we're doing good. So now here's if we can make 3.537, would you say that 3.33 is a good goal?
Yeah.
Because I want it to be easy for you. I want it to be doable, repeatable. I want you to be able to teach this, right? You're teaching it to your children, your nephews. You're the new mentor. I'm passing the torch to you, okay?
Okay.
So if we're making 3.33% per month average on our stock selection, our investments, okay? What amount of money do you want to have per month to retire into the stock market? You told me a dollar amount. What was it?
Okay. just give me a moment. So I need to take that
Give me the dollar
4,000.
amount. What's the dollar amount first?
4,000 is what we want to save, get a return every month.
Your number is 4,000. Listen, it doesn't matter. You can put 6,000. You can put 3,000. If you put
Hmm.
4,000, what we do, we take 4,000 and then we divide that by our percentage, and that gives us the amount of money that we need to
Okay, so
invest
we need
at that percentage to get the 4,000.
113, yeah, 113,090.
You're doing 3.53.
Yeah, 3.53.
Okay, but we're gonna make that easier for you. We're gonna make it doable and repeatable. We're gonna lower that percentage to 3.33.
Okay.
So do 4,000 divided by 3.33 because we know we can get that return a month, correct?
Yeah. So it is 121,212.
120,000.
Yeah.
$120,000, $120.12, right?
Yeah.
That amount of money invested at 3.33% return per month gets us how much per month dollars?
4,000.
Correct. You're just checking your math. So you get the amount of money you need, 4,000 in this case. We know what percentage we can get on our investments, which is 3.33, which is easier. It's doable. We know we can do more. Like if Mr. Morgan came to you and says, Sethu, we can increase our returns. You know, when you know how to make more money, correct?
Yeah. Yeah.
You can write the cover calls closer. You know, you can get dividend stocks that return higher. You know, just have to. We know IEP gives you 15% or 14%. So just adjust the numbers, right? And so your goal in this case is 120K. Is that doable?
Yeah.
I look at you and I'm looking at 120K on your account. Now, we're recording, so can you give us a 2-minute speech to the Harvard address?
Yeah.
To tell us how to retire in the stock market.
Okay.
We did some of it for you right here, but you also want to include how you select your share growth, how you select your stock selection.
Okay.
And anything else that you learned, you know how to do a core 10. You learn how to manage money. You know how to, what stocks we don't pick. We don't pick, we don't pick penny stocks,
Yeah.
So if you're ready, give me your presentation to the Harvard address to teach them how to retire in the stock market. You ready?
Okay, I can give it a try first. Yeah.
The floor is yours. Hey, take your time.
Yeah, sure.
You're going on YouTube you're going on YouTube.
Okay, good. Okay. Okay. Hi, Harvard students. I'm glad to speak to you about the stock market strategy in order to become a millionaire and retire happily, so that you are financially free and not bound by any burden regarding a job or something like that. So from my mentorship training with Eric, I was able to understand the strategy of the stock selection criteria. So some of them are around like the volume should be 2 million per day. Then you look at the 10-year chart price, and the share price goes from left to right, and then it's growing. And you look at PE ratio of 28 plus, and the company pays consistent dividend, and it's suitable for option play, and it has got a stock split, and the share price has doubled or tripled, and it has got a very good market cap of around 15 to 25 billion, and share price has reached some peak highest price, and it's the stock value is around 50, 100 or $200 stock. And we don't go for any sort of penny stocks, because we want to ensure that our success is good at the end of the day. And I looked at some of the growth stocks that we have picked up is around Apple, Nike, and Starbucks for my portfolio. And dividend stocks include Philip Morris, GSK, IEP, Coke, and Amgen. And for the cover calls, we have selected the Skechers and Twitter. And in addition to that, we have picked up Zoom, Netflix, and NVIDIA. So the strategy is overall to get around 25% return from the dividend stocks, and another 25% to come from share growth. And for the portfolio that we have chosen, for the dividend, the return comes to around 1.04%, and share growth is around 1.66. So the average of these two comes to around 1.35% return. And we look at cover calls, which is 50% of the portfolio, and that gives an additional return of around
We got 5.721 for.
Yeah, 5.721. And so the overall average of the cover call, which is 5.72, and the other portion of dividend and share growth, which is 1.35, the average works out to 3.53%. And in order to just ensure that we are able to hit the target, we just lower the target that we are aiming for to be around 3.33%. And in order to the value that I looked at in terms of having a retirement income is around $4,000 per month, and with the return of 3.33%, I need a capital of 120,120 times and 12 cents. And with this capital investment, where 25% goes into growth stocks, 25% into dividend, and 50% into cover calls, I'll be able to generate a return of around 3.33%. That will fetch me around $4,000 per month, and that will help me to get the required amount of money to be financially free and not dependent on a job to start with. And I can continue to grow this money further, and I can become financially free as well. So this is our strategy to become a millionaire, and I'm very thankful to Eric for having coached me and mentored me on all this stock selection and various tools we use to achieve this financial freedom. Yeah, thank you, everyone.
Clapping. Wait. Give me your business card. Don't go anywhere. We need to talk. I have $1 million to invest.
Okay.
Give me your email. Give me your phone number. You can't go anywhere. We have to talk.
Okay. Yeah, my phone number is 90041942. I am from Singapore, and my email ID is sethuraman_p@yahoo.com. So any queries
Wonderful.
or questions you have for me, you feel free to contact me. As much as I'm knowledgeable, I'll share, or otherwise I'll talk to Eric and get you a reply. Thank you, everyone.
Yeah, wonderful. People are grabbing your coat. Come back. Let's talk. Excellent.
Yeah.
Very well done. You've outperformed your expectations. And I really appreciate that. And there's only better things to come. You take the basic information, you apply it, and you have your result.
Yeah.
And very good. Thank you. Congratulations.
Yeah. Thank you. Thanks, Eric, for all the time you have spent with me over the last 12 sessions. Though it's a bit scheduling sometimes was a bit challenging, but I thought that you did your best to cope up with the timings that suit me, and did your very best to train and mentor me.
Thank you, Sethu. I'm honored to be here. And there's no teacher without a student. There's no master without a people. We're like bread and butter.
Yeah.
Okay. Let's end there.
Okay.
I'm gonna stop the recording, but don't go. Okay.
Yeah. Thanks a lot. Bye.
Okay.